On March 26, 2024, a hot new tech IPO hit the market. That's right, Trump Media and Technology Group, ticker symbol DJT, the owners of Truth Social, the greatest social media platform to emerge since Twitter transitioned to X. And after its IPO, the stock did amazingly bad, losing more than half of its value in a few weeks. To put that in perspective, the company was worth around $7 billion on March 26 and was only worth $3.5 billion by April 16th. That is a lot of money loss, certainly more than enough money to start another direct mail steak company. Stocks go up and stocks go down. That is just the normal noise of the market. But in the few weeks following its IPO, Trump Media stock had a number of things happen to it, and all of those things tend to make stock prices go down. That makes this stock an excellent case study for understanding the market, how to invest, and what affects the price of a stock you might want to invest in or avoid. So let's dig into DJT and see what we can learn. But before we do that, it's important to get some context about the stock so that we understand what we're dealing with, because some of the reasons it went down are contingent upon how it emerged into the world, naked, kicking, and screaming. Let's go back in time to 2020. Gosh, I can almost remember how innocent and pleasant those days were. Feels like it was only yesterday. Anyway, one of the quirky cute details about that era was that the president of the free world, Donald J. Trump, loved to use Twitter. In fact, he sent 25,000 tweets during his presidency alone. At 1 tweet per minute, that is 416 hours or 17 straight days spent writing things like this.
I would like to extend best wishes to all, even the haters and losers, on this special date, September 11th.
Despite his massive following, platforms like Twitter eventually banned him following the riots at the Capitol on January 6, 2021. Oh, I'm sorry, hold on. Correction, that was an Antifa deep state false flag operation. My bad. With mainstream platforms off limits, Trump announced his plans to create his own network. Enter Truth Social, owned by Trump Media and Technology Group, launched with the goal of standing up against what Trump calls the tyranny of big tech. Truth Social opened on President's Day, February 21st, 2022, aiming to be a haven for free speech, and its interface was Twitter. The platform was basically Twitter, but it promised fewer restrictions on what could be posted. Truth Social was a private business, and the main way you make money as a private business is by generating revenue, selling stuff. And the main way to generate revenue with a social media site is by selling ad space to businesses that want to buy ads, like this beauty.
Breaking news, liberals are furious over latest gift to Trump supporters.
But for some reason, most major advertisers have been avoiding Truth Social. I can't imagine why. All right, we're on Truth Social and oh God. I cannot show any of that on YouTube with its censorship. Regardless, there is another way for a business to get a huge cash injection, and that is by going public. That's right! It is time to party like it is 1999 because the market has a case of IPO fever in 2024, and the only cure is a potential recession and a lost decade in the stock market. Anyway, companies typically issue an initial public offering so they can sell shares, which raises capital, and that capital can be used to pay off debts, fund new growth, or to allow company founders and angel investors to finally get their exit, rewarding them for their hard work in building a big business or whatever it is that founders do. Normally, when a company's owners want to be able to issue and sell shares on the open market, they go through a long underwriting process that involves lining up investment banks and broker-dealers and dealing with regulatory demands and so on and so forth. But why do that when you can just get a company that's already IPO'd to buy your private company, effectively taking it public automatically? And that, my friends, is what a SPAC does. A special purpose acquisition company is an organization with 3 purposes and 3 purposes only: to hold a ton of cash from institutional investors, to go public via an IPO, and to then buy the company that wants to skip the IPO process. And that is what happened with Digital World Acquisition Corp. DWAC gathered up a ton of cash, made a bid to buy Trump Media, which of course owns Truth Social, and on March 22nd, 2024, DWAC shareholders approved of the reverse merger, as it is called. The company changed its name and its ticker symbol from DWAC to DJT, and bingo bango, 4 days later, the stock was trading on the NASDAQ exchange around $60 to $70. The stock even rose a bit after that, but that was before the first of 3 major problems began that drove the stock price down. And what was the first problem? Well, before I answer that, I want to ask you a question. If you owned stock in a company that had just gone up over 100%, and you suddenly found out that the company was just hemorrhaging money, just bleeding out millions per year, would you keep it, or would you take your profits from it and run for the hills? Well, that is probably what happened with Trump Media. Regulatory filings emerged showing that Truth Social had lost more than $58 million in 2023. In fact, its total revenue for 2023 was just $4.1 million, giving the company a higher price-to-sales valuation than NVIDIA, which it's high. That's a high valuation. So, investors made a profit, finally learned what Truth Social was worth, and they just noped their way out of the stock. And when more people sell a stock than buy, the price drops. You might be asking yourself, how? How can a company that makes negative profits be worth anything, let alone billions? The answer is pretty simple, because that's what people are willing to pay for shares. Seriously, it's that simple. Let's say you own a company with just 4 shares, and you sell one of those shares for $1 billion. That means that on paper, the value of your other shares would be worth about $1 billion each, giving the total valuation of your company about $4 billion. And that's regardless of how much revenue or profit your company actually makes. And understanding all that will help you understand the second major problem that drove Trump Media's share price down. When a company has lots of owners, which is all that a shareholder is, it's like a big pie that's been cut up into a lot of different slices, and each share of a stock is a slice of the pie. Adding up the share price of all the individual slices gives you the market capitalization, or market cap for short. Now, sometimes a company will issue more shares, which makes additional slices out of nowhere without increasing the overall slice of the pie. It's worth the same, there's just more slices now. So there are more shares on the market, but the market cap stays the same. That means each share that you hold is going to be worth less pie. Naturally, that tends to drive the price of each individual share down. This is called share dilution, and it's exactly what will happen now that Trump Media announced its plans to issue millions of additional shares. On paper, this looks bad. It looks bad. After all, share dilution is a big middle finger to existing shareholders. But the cash raised from issuing new shares can eventually be used to help grow a business, acquire other businesses, launch new products. This can be a long-term benefit to shareholders. But sometimes companies will issue more shares so they can pay fat bonuses to executives or dividends to shareholders. Not that that's going to happen, right? That's not going to happen. That's not a thing that's already happening right now, right? I am sure the goal for this money is to help grow the company. After all, they are talking about launching a TV streaming service now, and that's going to cost money, and it's going to generate, well, maybe it will generate money. So, to tally up the reasons DJT has dropped, we have the company's actual fundamentals, which are atrocious. We have the stock dilution, which is double plus ungood. And we have one of the main reasons that companies IPO in the first place, which also happens to be one of the biggest risks in investing in IPOs, and the third likely culprit for DJT stock's precipitous decline. The original owners of the company probably want to sell their shares to make some money personally. Donald Trump himself owns a 60% stake in Truth Social. Take a moment to look up the current market cap of DJT stock. You will find it right there if you Google it at any time you're watching this video. If Trump sells his shares after his 6-month lockup period, or if the company board votes for a special dispensation allowing him to sell his shares anytime he wants, That's about how much money Trump will get if he sold all of his 78.5 million shares at the recording of this video. And by the way, that doesn't even include the additional shares the company plans to issue as a bonus to Trump. If the stock's volume-weighted average price is at least $12.50 for any 20 to 30 consecutive trading days, he gets an additional 13.5 million shares. And if it's at least $15, he gets another 13.5 million shares. And at $17.50, he gets another 9 million shares. And yeah, those share issuances will dilute DJT further, probably driving the price down. But it will give former President Trump way more shares that he will be able to sell. Now, you might be wondering, is this a real thing to worry about? Is this a real reason why Trump Media stock declined? Should investors be concerned about Trump selling his shares? Well, to be honest with you, I'm not sure. After all, I can't imagine any possible reason why Donald Trump would need a huge cash injection right now. Nope. Can't think of a single possible reason. Now, in the short term, depending on when you're watching this video, I actually think DJT stock will probably jump a little bit. Time will tell. And that is because at its height, it was hit with just a massive wave of short selling by institutional investors and hedge funds and a whole bunch of people. Hold on one second, let me check. Correction, I was wrong. It was done by dirty liberal elites. That's the culprit. Anyway, when you sell a stock short, you borrow shares from investors, sell those shares, and then ideally buy them back at a lower price, allowing you to keep the difference. So now that the share price has tanked, you're probably going to see a lot of those short sellers buying to cover their shorts, as it is called. And when there's a lot of buying, share prices go up. If we overlook the profit taking, the share dilution, and the potential for insider selling, and if we overlook the, and this is real, 84 pages of risk disclosures in the company's filings, does DJT have long-term potential as an investment? I have a gut feeling that this stock is going to do just as well as Trump Steaks, Trump Airlines, Trump Hotels and Casino Resorts, Trump University, Trump Taj Mahal, Trump Entertainment Resorts, the Plaza Hotel, the Trump Foundation, and New Jersey General.
Thank you for watching the video all the way through. If you like this video, don't forget to like and subscribe to our channel. And if you thought, oh, I would like to become more financially literate, I want to learn more about investing in detail, well, then check out my newsletter, The Legacy Wealth Monthly. You can click the link in the description box below. With the concept of becoming richer every month, Legacy Wealth Monthly is packed with information necessary for asset building through investment, and includes recommendations of individual stocks and commentary on current market conditions. Legacy Wealth Monthly also features a column from Mark Ford, a multimillionaire who built his fortune from an ordinary salary to 5 billion yen in just a few years. You'll also find editorial by a Japanese analyst and a Q&A corner to answer your investment questions. We provide you with lots of information, all with the goal to enrich your life. If you are interested, please check out the details in the description box below. Take care.